Very much, Janice. It's time for Money Tuesday. We're talking about life insurance, whole life insurance, and if you have enough money built up as a retiree, maybe should you cash that out? Here to talk more about that is Stewart Welch of the Welch Group. Good to see you this morning.
Good morning, Mike.
And I know you had a reader question that brought up an interesting question. A man who was, 52 years old. He had built up a nice nest egg in terms of retirement, but he also had still had a life insurance policy, right?
Yeah, so Mike, this person's 52-year-old, wants to retire early, has built up $1.5 million, so he's done a really good job.
Wish I knew this guy.
And here's the big question. They have a cash value life insurance that they're still paying on. His question was, I'm still forking money out. Should I continue to do this? And there are three things that he should consider. The first thing is when you buy life insurance, you have to take a health exam, and usually you're in really good health or they won't issue it.
Right.
And now it's maybe 20, 30 years later, you look and see, has my health changed? So if his health had gotten a lot worse, that makes the life insurance policy much more valuable. Okay. So the first thing is we're looking at it and saying with $1.5 million, he probably doesn't need the life insurance for the traditional death benefit.
Right.
So we're looking at it as an investment, and if his health's bad, it's probably looks like a good investment. The second thing is when you're evaluating as an investment, you can have the agent run an illustration and figure out what is the rate of return on my investment to the death benefit. So this is really for your heirs. And typically we'll find it's maybe as much as 3 to 5%. So it's like a CD or bond. So you might say in continuing to put money in this life insurance policy is like continuing to invest in like a CD.
Okay.
And then the third thing is if he's been paying on it 20 or 30 years, and again, you go to your agent to ask this, but he may have paid in enough money so that there are no future premiums due. And so those are really his three options.
Is there usually a penalty to pay at all if you do cash out?
Well, typically after this period of time on life insurance, usually there's a penalty for cashing a policy in for about the first 10 years. So I'm assuming in this case it's much longer than that.
Gotcha.
So there's likely not to be any penalty if they decided to cash it out.
All right, great information this morning, Stewart. Thank you so much.
Thanks, Mike.
We'll be right back. More